All right. Now, let me do something. It is not in the question, but let me do it. What will happen in the final year if either they convert or they don't convert? What happens? So because this question is having the items there, I'm going to deal with it in that particular case and handle it. So it is not in the question, but we're going to do it. So please stay with me carefully and understand the principle. You realize that all the questions that I've been receiving, I refer you to the principle. That is why I keep on saying, understand the principle. That's all. Let's go. On the redemption date. Please, what we are doing here relates to the convertible debt. So on the redemption date, two things can happen. Either they will exercise the option or take the money and go away, meaning they will redeem the loan notes. So two options. Why are we interested in this? Because we want to know how it will actually be impacting the financial statement. And per the examiner's question that has been brought in financial reporting, corporate reporting about financial instruments over the last 5-6 examination dates, this part has not come yet. So please understand the principle and let's go away. So on redemption date, for convertible debt, there are two options available. Either they will exercise or they will take their cash. But whether they exercise or take their cash, how much do we owe them? So let's look at the carrying amount of the bond on redemption. Please stay with me carefully. On the date of redemption, the nominal value of the bond, that's what they get. In the context of our question, the nominal value of the bond was 1,500. Then the equity element relates to the bond. So we bring it up, and that is coming from OCE, other components of equity. You know that already, 167. Because remember the principle we established here. Go back. We said equity is carried at the initial amount in the financial statement in the financial position under equity as other components of equity. So it doesn't change. But on the date of redemption, it has to come on board. So right now in our books, relating to this debt that has been issued, the amount available is going to be 1,667. Stay with me carefully. So let's say case number 1. They redeem the debt, meaning that the bondholders take cash. They don't want to convert into shares. If the bondholders take cash, what happens? Simple. We have to de-recognize the loan notes. So all we would do is to debit on the face of the financial statement, on the face of the financial position we extract here, we brought in 8% convertible loan notes. By the time we will convert it, we'll get our money 1,500. So we just debit the 8% convertible loan notes to de-recognize it. Convertible shares, let me use the right word, 1,500. That's the nominal value on the date of redemption. Okay, that's what we pay them. And then we'll credit our cash, 1,500 ASA. But then what happens to the equity component? Because if they redeemed, we've paid them 1,500, but what happened to the equity element? The equity element will still be where it is at, and it will be classified as undistributable reserves. So the equity element remains in OCE, other components of equity, as undistributable reserves. Undistributable reserves. It's like the benefit we gain from issuing the convertible shares. So if they decide to redeem, take their money, the 167 is still in our books. It increases our balance sheet figure. Are you getting the idea? That's the option one. That's the option one. Option two, let's say bondholders exercise their option. So option two, exercise the option. Meaning bondholders convert. Meaning bondholders convert. Please stay with me carefully. We still have 1667 in our books, but what will be the nominal value of the shares they will get? Go back to the question. Let's pick that up. What are we told? We are told that each share is convertible on 31st December 2025 into 2 ordinary shares. Okay. So the ordinary shares they are going to get will be 2. So it will be 2 times 1,500 shares, right? Because they issued 1.5 million shares. And so they will get 3,000 ordinary shares. Sounds good? But what is the nominal value of that ordinary shares? So nominal value of the ordinary shares they are getting, that's going to be 3,000 times. We were given the value in the question to be what? 0.1 Ghana cedi each. 0.10. Can I have an answer coming up? What do we have?
300.
300 Ghana cedis. 300. Now remember, we are working 3 zeros up, certainly. So, but they will get 300. So stay with me carefully. On the date of redemption, they will get 3,000 ordinary shares based on the conversion policy. But that 3,000 ordinary shares will be valued at 300 Ghana cedi. So what happens here? Remember, our amount outstanding is still this figure. So let me duplicate it and take it to the next slide. So this 167, we will less the share capital, which is going to be the nominal value. The 300. The balancing figure will be taken to share premium. It is the profit we are making on the issue of shares. The balancing figure will go to share premium, 1367. This is what happens if they decide to redeem. So you realize that if they redeem, we are better off because our share premium is big, 1367. But if they take their cash, we only get 167 as undistributable reserves. So this is what happens on the date of redemption and its implication on the statement of financial position. Because I gave you general entry on the double entry, we derecognize the loan note. So we debit 8% convertible loan note. convertible shares, and that's 1,500. Okay, then you debit other components of equity, okay, in relation to the equity element of the debt. Remember, that should have a credit balance, so you're debiting it with a 167. Then we credit share capital with a nominal value 300 Ghana cedi. Then the balancing figure from this is what we are crediting to the share premium, being the profit from the issue 1367. 1367. So this is the journal entry for what happens on redemption. Like I said, this is the part of financial instruments that the examiner hasn't brought yet. What will happen in the financial statement if bondholders are converting?